Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Okay guys and girls, let's go back to the gold market analysis. So on the daily chart we see that yesterday's session was very small. Market was standing in a tight range, and by this performance we can't make any bullish conclusions. That's market is turning up again. So mostly it seems like the downside continuation. And when we'll take a look at the pictures on the lower time frames, we even have more reasons to suggest this. So right now we could see that the picture starts looking absolutely different compared to what we saw on last week. So as we talked about, this market has reached this level. It was a lot of questions and uncertainty concerning the possible downward action. So but for now our situation is changing, and it means that despite how the overall situation we're looking right there, always exists chances for the possible changing of the direction. So here you could see that the tight consolidation stands on the daily chart. Trend remains bearish. It means that it mostly looks bearish that some kind of another swing down could happen with a high degree of the probability. And the lower time frames we see the confirmation of that. So if we take a look at the full time frame chart, you can see consolidation around the confluence support. We already saw it a few times. I have shown you in the recent couple of weeks. It was a situation that we saw twice probably. So when the market after the drop, if you remember on the dollar index, we discussed this. When market dropped, right, the XOP was forming this kind of the pennant, and we said the market should drop more, and this has happened right on the next day. So in here once again, so it might start getting some signs of the bearish dynamic pressure. Since we have the sideways action around strong support, it means that market has no power to show the bounce. And take a look, all the stuff is going on the background of the bullish MACD, so it means that trends bullish, but price action is not, and it suggests a possible downward drop. So maybe the payrolls will become the catalysis, all this stuff. So logical downside destination point will be somewhere around 2015 area. 2017 is the confluence, the fib level right there. So on the hourly chart, it could take the shape of the butterfly. And here once again we return back to the discussion of the entry. So we discussed yesterday. Remember what we talked yesterday? Actually we talked about this every time. So it's always very difficult to make the decision on how and where to take the position. Those of you who have taken position right from the confluence now could move stops to the break even and see what will happen. Also, we have talked about the possible A, B, C bottom D retracement that led us to take position around 2055, 2060. But for now, you could see that this scenario, well, at least based on the current picture, it seems that it has really very small chances to happen. And it's more probable that we will get just downward continuation. And that just tells us once again that probably the idea of the splitting position in part and taking in part always makes sense. So speaking about the target, you could see that the nearest target will be, if it will take the shape of the butterfly, is around 2025. 1618 stands 2018, which is very close to 2017 on the 4 time frame chart. So that's probably the two targets that we could consider today, especially if the payrolls numbers will be more or less positive. And the Reuters poll suggests 258,000. So we put this in the Telegram even before the holidays. This was the post in the Telegram channel concerning the expectations of the market on the payrolls numbers. So that's our view on the gold. All that we could do currently is just wait and see what will happen. Those of you who have short positions, you probably could just hold them, move stops to the break even and watch the movie, what will happen.